Hi guys, don't forget to like, share and join our Telegram channel by clicking on the link which you can find in the description below. Remember, this is our only official Telegram channel, so do not be scammed. If you do not have Telegram, you can always download it so you can interact with us. Hi guys, welcome back. We're back with another video, and today I'm going to be sharing ways that you can actually use to better your entries, refine your entries, and most importantly, minimize your risk. All right, so I'm going to be showing you an entry type that we use, especially for those who are familiar with supply and demand trading or order flow, and I'm going to be showing you examples on how you can actually minimize your risk and get the right entry. Right, so this candlestick confirmation is very basic. I mean, for every beginner, I think this is, the first type of candlestick, formation that one learns, right? And this is the bullish engulfing or bearish engulfing. Right? So I'm going to talk about how you can actually now look out for this pattern, right, in the market, and you can also increase your probability by actually waiting for just this. Right, be it you're trading Nasdaq, US30, or any other currency, this works, right? So basically, the first thing that you need to understand, I like using sell examples, but this can also work on the buy side, guys, right? But I like selling. It makes sense to sell, right? So the first thing is you have to identify a sell zone. Right, now, how do we identify that sell zone? We want to see price push up, being a rally, and then this becomes our base area, right? And then we have a drop, right? So this type of formation, right, is what we want to look for. This is the type of formation we are looking for, right? A rally, base, drop. So this area then becomes your sell zone, right? So after this area, after you've identified this area, right, what you'd want to see price do is you'd want to see price move back to this area, giving you that accumulation, right? And then we continue to the downside, right? As basic as it is, right? Because remember, guys, you need to keep trading simple. I find people trying to complicate their trading with these systems that everyone is selling, blah blah blah, right? So here's an example. On this type of candlestick formation, right, this area right here, where, remember, we've got the first candle. In this case, let me see if I can change the color to blue, right? So this becomes our bullish candle, right? So after this prints, we expect to see, right, the next candle engulf this bullish candle, right? So at the area where this bearish candle actually engulfs this blue candle, which is your bullish candle, this area is the area that becomes our sell zone, right? So this is the area that you want to target for sell entries, right? So to make it easy, once you identify such, remember, we want to see such at an area where it's a sell zone, right? Remember, rally, base, drop. Right, after that happens and price moves away, this becomes your entry point, right? That becomes your entry point. Which area? The area where the engulfing candle, or the bearish candle, engulfs the bullish candle. That line right there, that's the area where you'd want to take your entries. Right, this is where you'd want to take your entries, and a good area for your stop loss would be above this formation right here, right? But it's also important to be very selective when it comes to this, because some candles are a bit too big, right? Some candles are huge. You'll find bearish engulfings like this, right? So you need to be very, very careful on how these formations play out, right? So that's the first one. And if you can actually big test this and train your eye to identify this, it will actually help you to make better entries and get good trades. All right, so we're just going to look through some pairs and see, I'm not going to complicate anything, right? we're not going to try complicate anything. We're going to keep it simple by all means. All right, so here's a simple formation. We've got a drop, base. This is a continuation type pattern, and then we have a drop away from that area. So this becomes the sell zone. Now if we can zoom in, right, this is not really a clean, right? That's why you need to be very selective. Not really a clean formation of an engulfing, but as you can see, this is what happened. Let me just remove this. So this is what we have. Right, that becomes our sell zone, remember. So price did move away, and we also broke structure. We had a break of structure right there. Now remember what I said right here, this area where it engulfs, right, where the bearish candle engulfs. Let me just make this thinner. Yeah, that area, this is the area that becomes our sell zone. Right now, if you can look, you can see that price actually went back, right, accumulation, and then we had that liquidity grab move to the upside, and then look at where this actually reacted at that point, right? That becomes our entry point, right, based on the candlestick formation that is formed right there. Right, so that's very important. You should definitely keep an eye on that. And as I said, this works on anything. Right, here's something else. You can see where price is coming from. We've got a drop, we have a base, right, and then we have the sell zone. Right, remember this becomes the sell zone right there. And remember what I said, if we zoom in, this area right here where it that becomes our entry point. And as you can see, just went above it a bit, but played around that area. Also gave us a nice formation there. We had a nice QM pattern there. So this was a nice area, right? So now this is the H4 time frame. If you actually have your entry there, you need to know that you've got, you need to be aware of your risk. So that's why I'll always, advise people to try by all means to minimize their risk in the smaller time frames, right? But it's good to actually identify these type of formations in your higher time frames, right? It will then make it easy for you to then go down to your lower time frames and get a good entry. Okay, so let us look for more examples. Right, remember, I'm not here to complicate anything. We're going to keep it simple. Right, here's another one, not really clean, right? But look at what we have. We've got a demand area being created there, right? We have the bullish engulfing, as you can see right there. That's the candlestick formation we're looking for. And then where it engulfs, remember what I said, where it engulfs, that point, that becomes our entry point. And as you can see, it did penetrate just a bit below that area, and then look at how price then continued to the upside. Right, so this is a candlestick formation that you can keep an eye on, and you can definitely keep an eye on this type of formation in any time frame. Right, in any time frame. Right, you can definitely watch that and try by all means to minimize your risk. Here's what we have, right? Look at that drop, base drop. We've got the engulfing, the entry point. That is actually where price pushed to and tapped. Right, so this would have been a no drawdown type of entry. And for something like NASDAQ, that's what you're looking for, right? You're looking by all means to minimize your risk when you're trading. So this would have been a no drawdown type of entry, right? So this can be found in any time frame, guys. Any time frame, be it 1 minute, be it 1 hour, there, right? We're just looking for something like this in the right market context, though, guys. Don't just open up a chart here, a bullish engulfing or bearish engulfing, and then sell or buy. See there, the entry point, that is where price pushed to. It had a little bit of drawdown, but then it paid out, right? That's what we're looking for. So guys, I always like keeping this very simple, and I'll always tell you to go back test this yourself. Right, of course there's other things that you look at, your market structure, blah blah blah, right? But this works anyway, guys. Let us look at GU. Right, if you look at GU, remember it's about being selective there. Sorry about that. There, right, you had a demand area being created right there. price unfortunately just actually came and mitigated that area. So you can see this candle went to that area and then took off, right? It's another bullish engulfing. And just below that, we've got another one there, more cleaner one there, and then our entry point is just there. Then look at how price just tapped there. This would have been a no drawdown type of entry, right? This would have been a no drawdown type of entry. So this is a very powerful formation, guys. It goes back to the basics. I feel like people are just complicating their trading, and you don't have to. Trading is already hard, guys. Don't complicate it. Keep it very simple. Trust me, people who are really successful in the market do not complicate trading. They don't. Right? So keep it simple. Right, so I hope you learned a lot from this, and I hope you go back and back test. If you're new here, don't forget to hit that subscribe button and also join our Telegram channel. Find the link in the description below for free signals, free setups, and more educational content. Have you been struggling to make consistent profits in the Forex markets or not had enough time to analyze the markets and trade? At MMK, we have experienced and qualified traders who analyze the markets and send signals directly to your phone. We are highly selective traders, and we provide 5 to 10 signals weekly and a minimum pip count of 1,000 pips monthly. Join the winning team and stop donating your money to brokers.